Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel L. Connon, along with Brianna Valesky, and we have Raghee Horner on the line. She's a Forex and currency trading expert for Simpler Forex. Raghee, how you doing on this busy morning?
This is a great Friday. It's been pretty interesting, no doubt. Love some NFP volatility.
All right. Well, first of all, how did you get interested in trading in high school, and what did you trade back then?
Oh, wow. So basically, I started trading commodity futures back in high school, and mostly I was doing it in an effort to prove to my mother, who told me if I get a job, I'm going to invest 25% of it in the market. And if I could prove to her that I was actually losing money in the market, being a sassy little 16, 17-year-old, that I wouldn't have to give her 25% of my check to invest. And lo and behold, when I started tracking that my money was growing without me doing anything, that was just a watershed moment for a kid that age. And it wasn't long after that that I started deciding that I need to figure this trading thing out. And futures were it. Softs, actually, a lot of softs and grains back then.
And you still traded the same instruments now, huh? Maybe added a few and...
Yeah, I think that softs and grains will always hold a particular special place in my heart, but I love currencies and currency futures. Forex and Forex futures is where I've really started to find my niche.
You said the softs and the grains? Did you say?
And I still do. I still love cotton. I still trade cocoa and sugar. Absolutely, but just not as much as I used to.
Okay, we got a question coming out of the chat here, and talking about the dollar here, we'll go into the whole interest thing, in 1 second. But Ace from New York wants to know where you see the dollar versus the yen over the next few months.
All right, Ace, thanks. So anytime I'm looking at dollar yen or any Forex pair, I always want to think about the individual currency story. So dollar yen is really the story for me of what the dollar index is doing. So yeah, I'm going back to dollar index futures, which are bouncing along, I think, an oversold support level on the daily. And I've actually got dollar calls. I'm a dollar bull, so I need to put that out there first. The yen's interesting because if we're going to continue to see this non-farm payroll Dow strength, that's going to weaken yen. Right now, unfortunately, when it comes to dollar yen, we're stuck smack dab in the middle of a very sideways, narrow range. So I don't see opportunity right now where we're at, just hovering below 120. If we get down to, say, 118.50, I think I'll be a buyer down there. But right now, there's really nothing for me to do. But I am a dollar bull, so maybe looking for dollar buys elsewhere might be much more interesting for me.
Okay, great. Great answer there. Moving on. Now, you have a pretty precise way of trading, and it's the 34 EMA wave and grab candles. Wow. You're going to have to explain that to me.
I learned how to trade in a bubble. My teachers in the late 80s, early 90s were Charles Dow, Richard Schabacher, Richard Wyckoff. In other words, people who were trading the markets 100 years ago. And what I love is when you look at what those gentlemen did and what they teach, fast forward, computers, technology, internet, high frequency, everything else, that stuff still works. And at the heart of what I learned mainly from Dow and Wyckoff was this idea of market trends. Understand the psychology of the market based upon the trends. And that's what the 34 EMA wave and graph candles allow me to do. Understand sentiment, momentum, and trend. And for me, really simply, sentiment plus momentum equals trend. And if I can find a trending market, whether that's a 5-minute or a daily, I think within that context, traders like us have a tremendous edge in understanding the clarity of the market. And that's where I know that I want to get busy. So that's what those tools do for me. I identify trends or non-trending markets.
Did you discover this method of trading, all at once, or did you kind of have to tweak it over time?
I actually tested, and this is how much time I had because I was a market geek, and these were great years. Now, I always envy new traders because they're at that new, the markets are great. I remember I get depressed when the markets would close. I was like a dragon player with no dragons. And that excitement is what used to push me to 50, 60-hour weeks of crunching numbers and looking at charts. And I actually tested the Fibonacci number series using exponential moving averages to 1,597. And what I found for what I needed to recognize these shifts that Charles Dow would talk about in market trends, accumulation, markup, distribution, markdown, I found a 34 EMA with that Fibonacci number setting on an exponential moving average just rocked. And that's how that came about. The graph candles are just color-coded candles that, to me, make a Japanese candlestick tell a better story. Gives me a better idea of strength and weakness visually. And the color coding, I think, for traders who are looking at multiple screens. I'm not looking at that many screens, but if I'm looking at a lot of charts, the more I can access at a glance, kind of along the line of Malcolm Gladwell's Blink, just makes my life easier.
Okay, that's a great book. So you brought it. If we were sitting at your desk right now and looking, at your trading setup, how many screens do you have? How many different commodities have up? What are the, time frames of the charts that you're looking at?
So right now, between the hours of 8 and 10, Monday through Friday, I kind of endearingly call them my think tank. I'm in a chat room right now with, a bunch of who I consider my think tank, my trading friends, my tribe. And that means that my setup's a little bit different. I've got the text window that I'm talking with them on. I've got my spreadsheet of trades. I'm probably looking at some streaming, whether that be something along the lines of my Twitter feed. And then actually right now, I'm using only about two screens for my charts. I only get a pair of eyes, and I know that a lot of people like multiple screens, but about 5 years ago, I decided, as my monitors began to increase until I was looking at one time of probably about 10 or 12 monitors. I thought, what am I doing irradiating myself? The office that I sit in was about 15 degrees warmer than any other room. And I thought,
Yep.
Can I start to, I'm sorry?
No, when we used to trade in the Bright office and stuff, we used to had all these monitors and we used to turn the lights off, and we used to, for a real sunny day, put the shades down. But I know it could be a weird tear in your eyes. That's an excellent point. And sometimes you just need to get up and move away.
Exactly. You're really microwaving yourself. And I decided, I want to go the other way. Everyone's getting more monitors. Can I live off my laptop? I remember reading, and I'm sure everyone knows this now famous story about Mark Zuckerberg skiing somewhere, I forgot where he was, and whipping his laptop out on the mountainside and taking care of, I think it was the Facebook back then. I remember reading that story and going, wait a minute, that's why I wanted to be a trader. I wanted to get out. I wanted to, be on my boat. And I want to be able to take my laptop out and look at what's going on with the euro yen or the dollar Canada. And I started to actually contract. I said, if I can't trade off one or two monitors, something's way too complex here. And I actually went the other way with it. I started to say, can I be a single monitor trader? It almost sounds like, heresy compared to this multi-monitor world, but I really wanted to contract. So I'm looking at one or two screens for my charts, and it's mostly Forex and futures.
That reminds us of a story. Dennis and I traded together for several years in the Bright office, and people would have their monitors up and their indicating moving averages and stochastics and just all these things on there. And we used to call it, analysis paralysis. And Dennis went up one day and looked at the guy's chart and he says, "Where's the price?" And that's the most important thing, and that's good. That's a good thing for traders, especially ones that are getting new or getting started. Ace has another question here, just regarding trading stocks versus currencies, and he says he's heard currency moves are a bit more predictable than stock moves, and that they stick to what they're doing or supposed to do more than equities. Do you find that to be true?
I think, and I hate to be one of those people that prefer one market over the other, because one of the things I always try to remember is I can still draw a line from the yen to the Dow to, one of the Dow top-weighted stocks. So I do think there's a connective thread. So I don't want to say, equities are not as good as Forex, and that would be such a foregone conclusion for a currency trader to say. But having said that, I think the tectonic plates that move the Forex markets, the central banks and the transparency the central banks have to put out before they move, and the things that move economies just aren't as twitchy necessarily as things that would move equities. So because of the liquidity, because of the type of fundamentals that move the markets the way they do in Forex, when they tend to get going, it's like a freight train. It might take a little while for that to get going and really sustain, but once it's moving, it's not going to stop on a dime. I think that's why we see when people observe currency movement for the first time, they see these monster trends. They see these really clean corrections, because not only are the fundamentals these really broad, wide-sweeping fundamentals that move the markets for a long period of time, it's a true 24-hour market. We really have true 24-hour liquidity. So the market doesn't have to wait for the next bell to ring to discount what happened. It can discount things much more in real time. And I think you just end up with a whole lot more organization. Going back to what you said about price, it just respects these price levels so much more, is what I found. And this is coming from a girl who traded equities and futures for nearly 20 years before even adding Forex into the whole mix in late 1999.
Okay, so you just were talking about the global market. I mean, do you have that laptop by your bed and you're watching the markets 24 hours? I mean, currencies you really can't use stops, right? In the foreign exchange market, are you sometimes you just wake up at 2 in the morning and just get in there and trade, or I mean, because that could be very very tiring if you're doing that. How do you keep yourself from getting burned out? Because obviously with what you're trading, you have to follow the markets around the globe.
I will say, when you look at, and this could be a whole other conversation sometime, when you break down the 24-hour Forex market, people think, oh, I've got to be an insomniac, I've got to get up at 2 a.m. I did that. And, my husband, very patient guy that he is, are you getting up to watch the UK Open again at 2? Yeah. And he goes, what happens then? Why do you have to get up? He had a good point. When I started looking at individual currency pairs and looking at when they put in the bulk of their movement for that day and the highest volatility, minus the British pound, most of them do the most movement between 8 and about 11:30 a.m. Eastern. So all of a sudden I thought to myself, why am I getting up at 2? As far as stops go, in some ways, I think the risk management is better in Forex, because, again, there isn't that open and close every single day. But to account for the volatility, there is something that I use called price movement ranges. And it's on an ATR. It's something where I can look back 6 months and look at the hour between 8 and 9 o'clock and see what the average to high and low range was for an individual pair. I can even do that per day of week. So armed with that kind of knowledge about the typical price movement range of an individual pair, I pretty much know if I'm within striking distance of any kind of target or stop. And that way, session by session, I don't really have to lose sleep. I know if I'm close to a stop or not. And I can manage it a whole lot more accurately with that kind of information.
Do you have any automated systems?
I am way too much of a control freak, and I'm way too much of a discretionary trader. I just don't. I've tried a million times. I think I've mechanized a lot of what I do, but I haven't systematized it. I do have a series of steps that I follow, and I try to follow them as systematically and objectively as possible, but I still like to have my finger on the trigger at the end of the day.
What's on your radar for today? Big news, bad numbers, good for the market. And interest rates not going up, and we joke about it a lot, not going up ever. And if they are, they're not going up very much. So what are you looking at? Do you ever look at the S&P futures? Do you look at the T-bonds? You just trading the currencies? What's on your radar for today?
So I mentioned the one screen is Forex, the other screen is futures. I'm looking at dollar. I've got actually a lot of options, and I'm playing a lot of weekly trends in a number of markets. I've got some dollar options. I've actually got some calls in the Dow. So I'm playing a number of options, trying to play some volatility. Got some calls in gold. So I'm playing what I call my Forextra, which are those futures contracts I think really do vibe well with Forex. But I'm actually a dollar bull. I'm looking for more opportunities to buy U.S. dollars. Since Stephen Pelosi, was it last week, kind of said that the Bank of Canada is done cutting, I'm actually looking for buys in the Canadian dollar. Australia, I think RBA cuts. I don't think we're going to see another one. I'm actually looking for buys in the Aussie. So there's selective little places, little pockets of opportunity that I'm looking for some of these buys. But overall, I'm a dollar bull. Probably the weakest currencies to me still, longer term, are New Zealand dollar and euro. And even those have been a little, you've got to be pretty selective about where you jump in there. But I think one of the easiest ways to kind of account for the chop we're seeing now is just go out to either a longer time frame, so you're absorbing some of that bumpy road, or go really short term. So I've been kind of living off 5 minutes and playing, an hour or two out at a time, or I've been going very, very long term on weekly charts with options.
Okay, you've written a couple books. Tell us about them.
Oh, yeah, I've written, I did that to make my mom happy. I didn't realize, I didn't realize it was something that I was going to end up writing 3 of, but my last one was Forex on 5 hours, and it was really part of when I was talking about that contraction earlier. How can I be a trader who spends a few hours in the morning doing my analysis, doing my chat, assessing what's going on, and then throw my MacBook in my purse and go live my life. And that was kind of my attempt at kind of where I am now in my trading life, which is to say I want to keep up with the markets, but I want to kind of have a life too. And that's where a lot of times being in a very short-term intraday trade lets me be flat and control risk, or going out to those longer-term time frames actually lets me live a life. And I think at this point in my trading career, about 25 years into it, I'm finding that's really been a good balance for me.
Okay. Any advice for new traders?
The first thing I would say for new traders is, don't go looking for a coach just because their results have been really good. Find someone who trades like you do. I've had traders that say, I like your style, but I'm a 5 minute, I'm a tick trader. And I tell them, look, the smallest time frame I ever look at is, 5 minutes. So, find someone who's wired like you, because there's a lot of ways to make, I believe, a living in the markets, but you've got to do it in a way that you play up to your strengths. So much of trading psychology is about finding your weakness and getting better. But to me, every superhero finds what they're good at. Batman doesn't get ticked off that he can't fly. He's got gadgets. To me, find your superpower, find what you really like to do. If it's longer term time frames, focus on it. Don't go find a day trading book and try to become something that you're probably not naturally gravitating to. And then after that, put the blinders on. There's so much it's going to continue to want to grab your attention. So put the blinders on, follow that system, make sure it's good for you, and then give it a good, honest try, and then try something else. But don't mix. I find a lot of traders take advice from 4, 5, 6 different analysts or educators, and then they just end up with a mess. Follow the recipe for a while, see if you like it, and then move on to the next.
I love that you just compared being a trader to being a superhero. That's pretty awesome. That's a great comparison for Friday. All right, Raghee Horner, thank you so much for joining us today. She's a Forex and currency trading expert for Simpler Forex. We'll have to bring you back on the show again, too. Joel, I think he's got one more comment for you.
Yeah, hopefully on that screen or that MacBook or whatever you got, hopefully you can find a little corner to put Benzinga's pre-market prep on and listen to it on a daily basis, because we'd love to have you back on again soon. You give some great advice for our traders. Thank you very much.
Thank you.